There is a moment in every trader's life when they swear they were just watching the market, and then suddenly they are in a trade they never planned to take. They don't remember clicking buy. They don't remember the reasoning. They only remember the feeling, that tightness in the chest, that electricity in the nerves, that whisper in the mind saying, if you don't get in now, you'll miss everything. I know that voice. I've fought it. I've lost to it. And eventually, I learned how to silence it. FOMO, the fear of missing out, is not something modern traders invented. It's older than charts, older than candlesticks, older than the market itself. It's born from human nature. I first met it when I watched a stock rise without me. I met it again when I exited early, only to see price explode higher without my position. And I met it most painfully when I broke my own rules because someone else's profit felt like my personal failure. That is the poison of FOMO. It turns another trader's success into your insecurity. It makes you feel like the market chose them and rejected you. And when that feeling grips your chest, when that whisper grows louder, you stop trading the market and start trading your emotions. You begin to believe the opportunity that passed was meant for you. You chase not because the setup is valid, but because you feel entitled to what you missed, and entitlement has no place in the market. The chart cannot reward your frustration. It cannot soothe your envy. It cannot repair your insecurity. It only reflects your discipline, or your lack of it. FOMO is not just excitement. It is a distortion of reality. You see price running and suddenly all the hours you spent studying feel meaningless. All the backtesting, all the journaling, all the rules, they fade into the background. In their place rises a single emotion: panic. Not panic of losing money, but panic of being left behind. Panic that others are winning while you are frozen. Panic that this is the move. And your hesitation will make you look foolish. But here is a truth that cost me more than money to learn. The moment you feel that urgency, that breathless pressure to act, is the worst possible moment to enter. The market is not inviting you, it is tempting you at the climax of exhaustion. FOMO never pulls you at the quiet beginning of a trend. It pulls you when the move is loud, obvious, and dangerous. It convinces you there is still room to run when in reality, smart money is already slipping out the back door. I have watched traders wait patiently all day for their setup, only to throw away their entire plan in 5 emotional seconds, because a candle sprinted upward. They abandon structure because chaos feels exciting. They abandon patience because impatience screams louder. But excitement is the enemy of consistency. The best trades I ever took felt calm, almost boring. The worst trades felt electric. They felt urgent. They felt like now or never. And they almost always ended in regret. When the trade snaps back, and it usually does, you don't just lose money, you lose trust in yourself. You lose the belief that you can follow your own rules. And that loss is far more dangerous than any red candle, because once self-trust cracks, everything becomes distorted. You hesitate when you should act. You act when you should wait. You chase when you should observe. You revenge trade when you should step away. FOMO becomes a chain reaction that slowly unravels your identity as a trader. It begins quietly. You're watching a move that's already extended. Clarity starts to dissolve, logic fades, emotion rises, and then your hand moves before your mind approves. Later, you sit there asking yourself, why did I do that? And the answer is simple. You weren't trading with thought. You were trading with fear, not the fear of danger, the fear of being invisible, the fear of being late, the fear of the market is rewarding everyone but you. Every time I resisted that urge, even once, something shifted inside me. The noise softened, the urgency melted away. The market stopped feeling like a battlefield and started feeling like terrain I could navigate calmly. Missing a move no longer felt painful, it felt powerful. The day I understood that missing a trade is not incompetence, but control, everything changed. Missing a move means nothing. Losing discipline means everything. It reshapes how you read price. It makes ordinary moves look extraordinary. It makes extraordinary moves feel like once-in-a-lifetime chances. It turns the chart into a siren song, promising gold beneath the waves while quietly steering you toward the rocks. By the time you wake up, you're bleeding capital in a position that never align. D with your plan, the most dangerous part. FOMO feels like instinct, but it isn't. True trading instinct is earned. It's built through hours of observation, journaling, mistakes, corrections, and discipline. Real instinct whispers. FOMO shouts. Real instinct guides. FOMO pushes. Real instinct waits. FOMO demands. Imagine this moment. The market has been quiet. You're patient. Then suddenly a stock explodes upward. It feels unfair how fast it moves. Your heart rate rises. Your thoughts shift. You stop asking, "Is this my setup?" and start asking, "What if this is the one?" That single shift is where control slips away. You enter near the top. The candles pull back. You panic. You widen your stop because you don't want to admit you chased. You pray. But the market doesn't forgive emotion. It doesn't care about your fear. It simply does what it was always going to do. And that small impulse becomes a large wound. One impulsive entry leads to doubling down. Doubling down leads to widened risk. Widened risk leads to revenge trades. And revenge trades end accounts, sometimes careers. FOMO doesn't just appear in breakouts. It hides in subtle thoughts. I don't want to miss the dip. I'll take a small position just in case. Everyone else is in this. Beneath those words is something deeper. The fear of not belonging. The fear of not participating. The fear of being left out of the story. But the strongest traders understand something powerful. Sitting out is a position. Doing nothing is a decision. Observation is a strategy. Restraint is a weapon. The trader who can watch a stock run without reacting will outlast the one who chases every candle. I remember watching a stock run aggressively without entering. The younger version of me would have thrown everything at it. This time, I simply observed. No tension, no leaning forward, just stillness. And when the move collapsed violently, wiping out every late entry, I felt something stronger than profit. I felt control. That day taught me this: a missed opportunity is a small price for discipline. A bad trade is a massive price for impulsiveness. And here is the turning point most traders never see. FOMO doesn't end when the trade closes. It infects your thinking afterward. It lowers your standards. It makes you accept weaker setups. It stretches your risk and shrinks your patience. The discipline you built for months can unravel in one emotional decision. FOMO is not just a bad entry. It is a mindset that quietly rewrites your rules without your permission. Unless you confront it directly, it will follow you into every trade, disguised as urgency, disguised as opportunity, disguised as instinct. But instinct without discipline is just impulse wearing a mask. And the moment you learn to recognize that mask, the moment you can feel the surge of urgency and choose stillness instead, that is the moment you stop being a reactive trader and start becoming a controlled one. The market will always move. Opportunities will always appear. But your edge is not in catching every move. Your edge is in protecting your mind. Because in the end, the greatest loss is never the trade you missed. It is the discipline you surrendered trying to catch it. And once you truly understand that, something deeper begins to shift inside you. You start to realize that FOMO is not really about the market at all. It is about identity. It is about how you see yourself when you are not in a trade. It is about the uncomfortable silence when others are celebrating profits and you are sitting still. It is about the ego that whispers, if you were good enough, you would have caught that. But trading is not a performance. It is not a competition. It is not a stage where you must constantly prove your worth. The market does not measure your intelligence by how many trades you take. It measures your maturity by how many you refuse. There is a loneliness in discipline that most people cannot tolerate. When everyone is rushing in one direction and you choose to stand still, it feels unnatural. Your heart beats faster. Your mind searches for reasons to justify jumping in. You start negotiating with your own rules. Maybe this one is different. Maybe I can bend the plan just this once. Maybe I'm overthinking. That inner negotiation is where FOMO tightens its grip. It does not attack your strategy directly. It attacks your patience. It erodes your standards one compromise at a time. First, you allow a slightly late entry, then a slightly wider stop, then a slightly larger size. Each decision feels small in isolation, but together they form a crack in your foundation. And once the foundation cracks, emotional trading seeps in like water. The danger of FOMO is not the single trade, it is the emotional state it creates. A restless, reactive, impatient state where you feel like you must constantly do something. You open charts not to analyze, but to hunt. You scroll not to observe, but to chase. You sit at your desk not with calm focus, but with tension coiled in your chest. That tension becomes addictive. There is a strange thrill in impulsive entries, a rush, a spike of adrenaline. For a brief moment, you feel alive. You feel involved. You feel like you are finally part of the action. But that feeling fades quickly, and what replaces it is anxiety. You begin staring at every tick. You measure your worth by every candle. You breathe with the chart, and when price moves against you even slightly, your emotions swing violently. Hope, fear, denial, regret, all within minutes. This is not trading, this is emotional survival. True professionals operate differently. They understand that the fuck market is not a place to satisfy emotional hunger. It is a place to execute probabilities. They know that the edge lies not in constant activity, but in selective participation. Selective participation requires emotional strength. It requires the ability to sit through boredom without manufacturing excitement. It requires the ability to see opportunity without assuming ownership. It requires the humility to accept that not every move is yours to take. That humility is powerful. When you release the need to catch every move, you free yourself from the pressure that fuels FOMO. You stop interpreting missed trades as personal failures. You begin to see them as neutral events. The market moved. You did not participate. Nothing about your identity changed. And that is emotional freedom. Think about how many times you entered a trade simply because it was moving fast, not because it matched your plan, not because risk was defined, but because speed created urgency. Now think about how many of those trades ended with you wishing you had waited. The pattern is not random. Fast moves attract emotional traders. Emotional traders enter late. Late entries create poor risk to reward. Poor risk to reward creates stress. Stress leads to mistakes. And mistakes compound. Meanwhile, the disciplined trader waits for pullbacks, confirmation, structure. They are not impressed by speed. They are not seduced by noise. They understand that sustainable trends breathe, they expand and contract. They create opportunity for those patient enough to wait. FOMO hates waiting. Waiting feels like weakness to the undisciplined mind. It feels passive. It feels unproductive. But in trading, waiting is active control. It is a conscious decision to protect capital. It is a statement that your standards matter more than your emotions. Every time you wait instead of chase, you strengthen a mental muscle. Every time you close the chart instead of forcing a trade, you reinforce self-trust. And self-trust is the foundation of long-term profitability. Without self-trust, you will always doubt your entries. You will always question your exits. You will always feel pulled between fear and greed. But when you trust yourself, truly trust yourself, trading becomes quieter. You no longer need to be right on every move. You only need to execute your process. You understand that consistency is built from discipline, not brilliance. You accept that some days will pass without a single trade, and that those days are not wasted, they are protected. There is something deeply powerful about ending a session flat, knowing you respected your rules, even if the market moved aggressively, even if others made money. You preserved your clarity, you preserved your emotional balance, you preserved your emotional balance, you preserved your capital. T. Hat preservation compounds. Most traders think profit compounds only financially, but emotional stability compounds too. Confidence compounds. Discipline compounds. Discipline results eventually follow. The external results eventually follow. FOMO, on the other hand, compounds damage. One impulsive trade weakens your confidence. Weakened confidence increases anxiety. Anxiety leads to more impulsive decisions. Before long, you are no longer trading your strategy. You are reacting to your last mistake. Breaking that cycle requires awareness. The next time you feel that surge of urgency, pause. Do not immediately look at the chart. Instead, look at yourself. Notice your breathing. Notice the tension in your shoulders. Notice the speed of your thoughts. Ask yourself one simple question. Would I take this trade if it were moving slowly? If the answer is no, step away. Speed should not be the reason for your entry. Structure should be. Confirmation should be. Risk management should be. If the trade only feels attractive because it is running, then you are not chasing opportunity. You are chasing emotion, and emotion does not pay. Over time, you will begin to experience something surprising. The more you resist FOMO, the less often it appears. The voice becomes quieter, the urge becomes weaker, the panic dissolves faster. What once felt overwhelming becomes manageable. You begin to feel grounded. Grounded traders see the market clearly. They are not blinded by spikes or shaken by pullbacks. They understand that volatility is normal. They expect noise. They respect risk. They accept risk. They accept uncertainty. And because of that acceptance, they are not desperate. Desperation is the fuel of FOMO. It whispers that this is your only chance, that if you miss this move, another may never come. But the market has been here long before you, and it will be here long after you. There will always be another setup, another breakout, another trend, another trend. Scarcity is an illusion created by impatience. Abundance is visible only to the disciplined mind. When you internalize that truth, you stop reacting to every fluctuation. You stop needing to participate in every narrative. You become selective, intentional, calm, and calm is powerful in a woe. That world where most traders are driven by fear and greed, calm is an edge. It allows you to think when others are reacting. It allows you to exit when others are hoping. It allows you to exit when others are chasing. That is how longevity is built. Trading is not about catching the biggest move of the week. It is about surviving long enough to let your edge play out over hundreds of trades. Emotional exhaustion. FOMO shortens careers because it accelerates emotional exhaustion. It burns mental energy. It creates unnecessary drawdowns. But discipline extends careers. It keeps your account steady. It keeps your mind clear. It keeps your confidence intact. And when your mind is clear, your decisions improve. When your decisions improve, your consistency strengthens. And when consistency strengthens, profitability becomes a byproduct, not a desperate pursuit. At the end of it all, the battle with FOMO is a battle for self-control. The market will tempt you. It will test you. It will present opportunities that look irresistible. But your growth as a trader is measured not by how often you act, but by how often you choose not to. You do not need to catch every move to succeed. You need to protect your discipline at all costs, because once discipline becomes your identity, FOMO loses its power. And when FOMO loses its power, you finally stop chasing the market and start letting the market come to you.